So maybe you have some cash laying around. You're thinking, where should I invest all this cash? Should it be stocks? Should it be real estate? Should I invest it in my own business? You may have heard that a lot of people say real estate's one of the best ways to generate wealth. Well, from my perspective, I have seen many clients of mine who are blue collar, working class people who invested in real estate and it dramatically changed their lives in a relatively fast period of time, as in 10 years or less, which in my mind is a very short period of time in the grand scheme of things when we're thinking of investing. So in today's video, I'm going to share the 5 massive benefits to investing in real estate. I made this video as I've seen a lot of other videos out there where I feel like they're not really talking about what I'm seeing on the ground as sort of the key reasons why real estate can really generate some serious wealth. Hey, my name is Sage Jankowicz. I'm a real estate agent based in Cambridge and Somerville, Massachusetts. I've closed over 300 transactions in the last 3 years. If you have questions as I'm going through this video, hit the Calendly link and we can set up a quick 15-minute call. Please hit that subscribe button. It really motivates me. I'm planning on putting out at least 100 videos this year, so please subscribe. Please share with your friends as well. All right, I'll start with the obvious ones and kind of get to the less obvious ones. So stick with me through the end. I'll really try and break it down for you guys. The first one is appreciation. When you buy a property, generally speaking, it will go up in value. And particularly in the neighborhoods I work, I can't really speak on a national scale with real estate. What I can say is if you are buying in Somerville, Cambridge, South Medford, some of the other areas I target, and you work with me at least, there's a good chance if you buy right that over the long run, and again, when I'm talking long run, I'm generally talking about at least a 7 to 10 year period, you will be in a very good position at the end of that period. I have seen many scenarios where someone buys a property for a much lower price and within 10 years, a lot changes. I'll give you an example. About a month ago, I saw a property. It was a 3-family in Union Square. They bought it for, I think it was around $500,000 10 years ago. I think it will ultimately probably sell for around like 1.5, 1.6. So that's about $1 million in gain from just holding on to that property for a 10-year period. So that's basically, in that particular example, making $100,000 a year while you hold on to this property. Here's the next one, rental appreciation. So not only is the property going up in value every year if you buy right over the long run, there's of course years where things might go down, even a couple year period, but over the long run, it's going to go up. But also rents generally go up, again, in the areas that I work. So to give you just a high level example, your most typical rental inventory in Somerville is a 2-bed, 1-bathroom apartment. 2012, the average price point was $1,900. Today, the average price point is a little over $2,600. So about a $700 a month increase per unit for a 2-bed, 1-bath. If you buy the 3-family, that's a $2,100 a month increase. That's very substantial. That's about 25 grand a year extra that you are making for the same property after 10 years time. But that's also the average. If you get a really good deal, you could be looking at up to $8,000 or maybe even more per unit over a 10-year span. And if you buy in the right place, if you buy the right type of unit, I have seen it happen. So rental appreciation coupled with the property value appreciation already is very potent. The third one is you're increasing your equity. So typically, at least in today's environment as of this video, you're going to put 25 to 30% down if you're buying a pure investment property where you're not living in one of the units. So if you're putting 25 to 30% down, you're taking out a loan of between 70 and 75% of the rest of the value property. And every single year, rents are coming in and they're paying down that mortgage. And every so often, you'll have to modify the loan or refi the loan, whatever. But as time's going on, the loan amount is going down, the property value is going up, and the rents are going up. So you're actually building equity in the property with other people's money through their rent. So now we're at 3 benefits that are all working in tandem at the same time while you're holding on to these properties. So you can start to see as things are going together, how they all connect. It can snowball very quickly, and especially over a long span. If things are increasing $75 a month in rent every year, that might not seem like a lot, but over 10 years, it's a lot. And if equity is going down substantially, maybe $60,000 a year, that adds up, especially when you put them all together. The next benefit is the 1031 exchange. And this is something, if you're a new investor, you probably haven't heard of. If you're someone who's dabbling with investing, you may have heard of, but you may not fully appreciate the benefits of it. So with a lot of other assets, when you go to sell them, you're gonna pay capital gains. And so like, I always see people on the internet who are like, I bought Bitcoin and I made all this money. And in my mind, I'm thinking, well, you're gonna have to sell that Bitcoin if you wanna use that Bitcoin. And when you do, you're gonna pay a really high tax in capital gains. One of the big benefits about real estate investment properties is there's something in the tax code called the 1031 exchange. And what that allows you to do is to basically sell the property, realize the gain and the equity that we just talked about, and defer the cost. All defer means is that you're holding off on paying the capital gains. However, you can defer for your entire life by either never ultimately selling the property or the new property you buy, or if you do sell, constantly 1031 exchanging, thereby deferring forever. And capital gains can be hundreds and hundreds of thousands of dollars when we're talking about $1 million gain, which I actually see pretty frequently. It's a absolutely huge savings. And to give you another example of the power of this, and I'm going to use made up numbers here, this isn't real. Let's say you bought a $100,000 property. Probably will need to put 25% down. So you have $25,000 cash, you buy a $100,000 property. 10 years later, that property is worth $1 million. So you've had a $900,000 gain, but let's just say in this example, you paid it off. So you have $100,000 of the actual house in equity that is now paid off, plus a $900,000 gain, in total $1 million. What you can now do is you could sell that now $1 million investment property. Then through the 1031 exchange, you could sell it, and then you could split those $1 million into four $250,000 down payments for 4 properties. And each of those properties could be worth $1 million. So now you essentially have a $4 million portfolio made up of 4 multifamily properties, each worth $1 million off of that initial $25,000 investment. Now those are just crazy numbers. It's not that simple. You put a lot of time and energy into managing properties. You're dealing with tenants, you're dealing with turnover, you're dealing with maintenance, you're dealing with all kinds of things that come up. A lot of people I work with think it's much more simpler than that, but there is a huge payoff, and that is another one of them, which is you can constantly be upgrading properties and sell one property and put them into multiple, or sell a bunch of properties and put them into one really good property if you see something excellent in the future. So it's extremely powerful. You can do all this without paying any gains. And for the 5th and final massive benefits, and guys, this is a huge one. I'm not going to spend that much time in this video on this particular one. I will probably make other videos that get more into this into the future. There are a lot of other tax benefits. You've probably heard this before, but a lot of people don't get into it. But the first thing is you can write off a lot of things. You can write off property taxes, which in Somerville aren't cheap for the multifamily properties we're talking about. You can write off your interest that you're paying on your mortgage. You can write off your repairs. You can write off your operating expenses. So you can have a lot of different write-offs that will help reduce how much you're paying on the rental income that's coming in every single year. But the big granddaddy of them all is actually something called depreciation. I'm not going to do a deep dive into depreciation, but just know that essentially what this means is that your property over time, according to the IRS, is losing value. The age of a home over time loses value. It ages. And so they have a thing called depreciation, which will basically give you essentially an annual tax write-off for 27 and a half years for most of the properties we're talking about in this video, which means that every year you could be looking at $10,000, $20,000, $30,000 plus in write-off against your income. So it's very possible that you could be cash flowing $20,000, $30,000 a year, but in the eyes of the IRS be making nothing, which means that you could have $30,000 coming in from your property and paying nothing in taxes for that. And again, I'm not getting into the specifics because this is actually a big rabbit hole. I probably will do a series on this, but it can be a huge game changer for you. So in conclusion, just to go over this, there's 5 things. They all kind of work together, and in time, they can have incredible benefits to what happens to your wealth. So the property is going up in value over time. Again, over the long run. Over the short run, anything can happen. The rental prices are going up, again, over the long run, not the short term. Your equity, the amount you owe the bank, is going down. So you're actually owning more of the property itself. These are all happening at the same time. If you realize a huge gain and your property has gained a ton of value, you can sell it for much more. You can sell it and then take the gain and not pay any taxes on it by deferring the tax burden into a larger property or multiple properties to grow your portfolio. Another thing I haven't even brought up is if you have a huge gain, you could put a huge down payment. You could take the $1 million, put it on a $1.5 million property and own 2/3 of it out of the gate and be in a situation where you're having really great cash flow now, still in that initial investment. And then finally, there's a ton of other tax benefits where you can actually be collecting income, and in the eyes of the IRS, they don't see it as income. Hopefully this was helpful. I know this one was a little more complicated, guys, so if you have questions, please hit me up in the Calendly link below. I'm happy to answer your questions. I also need to add, I'm not a tax professional. I am not a lawyer. I am not a financial planner. This is from me living and breathing this stuff all the time and talking to a lot of people that are way smarter than I am. So if you need tax advice, talk to a CPA or an accountant. If you need legal advice, talk to an attorney. Don't use this video for estate planning. But yeah, please subscribe, please like this video, and I look forward to seeing you guys next time.